We're snorting cap rates and shooting up cash flow here at Deal Junkies. Welcome back to Deal Junkies.
Does your dishwasher not work?
It works. I just don't have time to put this in there. I gotta use it daily.
You hand wash that?
No,
You don't rinse it out?
No, I put. They're making fun of me because we just found out I've possibly been drinking dish soap for the past.
Oh no,
days.
not possible. Trevor's sitting here with a shaker bottle. It's supposed to be protein powder.
It's suds.
And
It's a bottle full of suds.
I said, why are there bubbles in it? He said, oh, I had protein powder. I said, no, protein powder does not bubble. That's dish soap. So we found out Trevor has been living on a diet of dish soap
and protein powder.
He had a rough night partying last night, and now he's trying to heal himself with dish soap. This
so obviously Dawn.
This is what we call a doom loop. Trevor is in a doom loop.
It's like calling a foundation contractor for stormwater fix.
Wow. Trevor and Dane are the party animals. They're feeling it today. Mike and I feel great, though.
Amazingly great.
We're feeling amazingly great.
Yeah.
We're here to talk to you about doom. Oh, no, wait. Before we talk about
the
doom
urban
loop,
doom loop.
let's not talk about that yet. First off, before we do anything, we want to put it out into the world that we would like to interview Phil Knight on Deal Junkies. Mike thinks Phil Knight is like the ultimate deal junkie, and we need to hear his story.
He is there not?
So
well,
He's
if anybody
sent this episode about us talking about me drinking dish soap.
Well, they'll
as
probably
his
send it
intro.
to Phil Knight.
That's probably what's going to get him to want to come on. He's going to want to meet you, Trevor.
who's this guy that washes himself out with dish soap?
Yeah.
and does real estate deals.
Never met a guy like Trevor before,
Yeah.
guaranteed.
Yeah. Have you read Shoe Dog?
No, I don't know how to read.
When we were interviewing Gary, Shoe Dog was running through my mind. He's like a very small. He's not Nike, obviously, but IPO and how he ran it, and in the business, out of stressed out. Like Shoe Dog is the story of a brand new real estate investor, leveraged to the tilt. Not just
isn't there a movie about it? A documentary?
Yeah,
it's not
nearly
or not
as
a
good as the
movie.
book.
It's an actual movie.
the Matt Damon movie or something. That's more of a Michael Jordan movie, but then there's another one.
There's another
There
one
is
about just
another
about Nike.
Yeah, it's
Does
not as
Matt
good.
Damon play Michael Jordan?
Ben Affleck plays Phil Knight.
Yeah. That's a pretty good movie.
It's not
Not
nearly
bad.
as good as the book.
Not as good as the book.
But anyways, I was having wow, that would be really. And then it was, if you think about as a kid growing up in Oregon, is there any more person you can look up to from a deal junkie entrepreneurial standpoint than
maybe
Phil
not.
Knight?
Maybe
Paul
not.
Curley.
Because Paul, but yeah.
All right, so Phil, if you're listening to this, we'd love to have you on the show. You're our hero.
What do you mean if? Phil,
He's not listening.
Phil, we know you're listening.
Well,
let's chat.
he will be listening one day. This is going to be great. I feel good about it. Okay, so we're going to talk about not Trevor's doom loop, but we're going to talk. Mike's going to teach us about the urban doom loop. What in the heck? This sounds scary. Tell us
It
what
is,
an
yeah.
urban doom loop is, Mike.
Let me turn. Okay, so what is the top, the headline?
Headline.
Is this a news story?
So Econ Northwest put out their 2025 economic report for the city of Portland. And that's been the report, and the word the economist used is urban doom loop. So the headline is why Portland may. Let's just underline the word may. Can we underline the word may? Let's not just send this out and say we're in a doom loop. May be in an urban doom loop.
Okay.
And it's because the statistics for Multnomah County, which is Portland, Portland's tri-county, but Multnomah is the heart of it downtown, statistics have not been great. Jobs have been lowering. Population has been lowering to a small degree. And you can see that. And in the latest economic report, it extended another year into 2024. So we have 2021, 2022, 2023, and now 2024 leading to this trend. And what's the reports that they kind of pointed to, at least in this 10-minute video that I watched on the report where they actually interviewed the economist, is the bigger things that he was pointing to and talking to about was, well, the incomes that are moving out and where they're moving to Vancouver, moving to Clackamas County, moving to Washington County. And so it's just this discussion of your purchasing power is moving out of Portland. And one of his statements was $1 billion of income has moved out of Portland.
Whoa. Why?
Because of the economic cycle.
So there's less opportunity, or people are just done with the nonsense, or what's happening?
It's all the above, right? So you can never point to one singular thing. It is a trend, an overall trend that has created reports that now show a cycle, right? And so it's showing one end of the cycle. And if you extrapolate that out over a long period of time, you don't get a change. You don't get a change in a cycle. You just get a loop. And now you're in this doom spiral
So you're
loop.
back where you started.
Yeah, because the assumption is well, demand's never going to come back, right? Demand's leaving, so that is a doom, and it's never going to come back, and so this loop of doom. That is the clickbait headline thought process.
You think he's right?
No, the last 1 minute of the video was, well, what are the silver linings?
Mm-hmm.
So first I'll talk to the biggest scary point in this is we dropped from outside capital wanting to invest in Portland. We were 50 out of 81 cities in 2024. Some things have improved, right? So the taper effect is happening. So that downward trend is no longer as steep, and it's rising back. So the change, you can see it in the numbers. You can see that, okay, the trend is starting to come back. But what the scary thing is you would expect, and he even said this, you would expect that to mean that we go better than 50 out of 81, we drop to 80 out of 81, right? And so what that's just pointing to is, from the scary standpoint, is from a national brand, we have not rebranded, and outside capital does not want to invest in Portland. And if you think about it, well, we are in a huge major macro money pucker. It's going to be really selective of where it wants to invest in. So dropping 30 spots, I think, is more of a reflection of just the macro environment.
You're saying we're 80 out of 81 in Portland.
80 out of 81 cities. So if macro capital had to invest in the city and they had 81 to choose from, we'd be number 80, not number 1.
So it's interesting because 75% of the commercial real estate in Oregon is owned by out-of-state or out-of-country investors.
Yeah. So
what you're saying, and I see this all the time, is somebody will call and go, I want to invest in Oregon, and we'll go, what are your markets you're aiming for? And they'll go, I'll buy anywhere in Oregon, just not in Portland, or just not in Multnomah County.
Yeah.
And it's like literally crossed off the list, and a lot of that just has to do with the laws and
downtown,
it not being with homelessness, downtown issues, politics. And then the laws are just not super business and landlord friendly.
Correct. And so Vancouver made a lot of conversations I've been having is Vancouver's as expensive as Portland now.
More.
Yeah, especially in the multifamily world.
Oh,
which makes me really
crazy.
Aren't the taxes better though?
Yeah, they don't have income tax. They
That's
don't
better.
have sales tax. They have probably a more difficult
Wait,
labor
Vancouver doesn't have
environment.
sales tax?
Yeah, correct.
Doesn't or does?
No, it does have sales tax.
But it doesn't have an income tax.
It does not have an income tax, and it's close to Portland to save on sales.
You know what
tax.
it does have is a transfer tax.
It has no. I don't like doing business in Vancouver because you have sales tax on your construction, you have transfer tax on your sale. It's not a low in tax environment. I think it's more about downtown. And so if you say the statement is we're not in a doom loop, what you're saying is we're at a period of time in a cycle and we're going to come back out of that cycle. So the conversation I had with Jack Fenty, shout out to Holly Eccles, met with Jack last week, is we had a commercial panel at Investor Lab last year at some point, and Brad Christensen of Colliers, who's been downtown Portland commercial real estate for decades, we're in the same plane, which is, look, I've been here, I've seen this, these are cycles. Portland got really expensive, and then it got dirty, and then politics got crazy, and guess what? When Portland gets really expensive, what does the burbs have to do? They have to lower their price. And so the cycle is driving demand into the urban core. So we're just in the cycle of demand going out of the urban core. Part of that is price related. Part of that is government political chaos related. Part of it is the tax environment relation. Part of it is the drug law relation, but that's more of it. It's a state level. That's all breathing in and breathing out. And we're already at a leadership side seeing the change of the breathing in, breathing out. Like when we were last year when I was in escrow to buy the tower, we talked a lot about this, which is we went far left politically and we've already swung back pretty significantly. In 2014 is when we decriminalized camping on the streets. We've recriminalized camping on the streets. And so the changes are in place, but they're not going to show up in the data. So that's one thought. So you understand cycles. You understand that when you make the right changes, then And then Portland also, because of significant high vacancy, it gets cheaper. And so when Portland gets cheap enough, and then when the environment is better enough, well, then those suburbs don't look as good, and so demand will fly back in. And so this report points more to downtown than it does Portland as a whole. And the conversation I got in is downtown has a really weird cycle to go through, and it will take a long period of time. And it is really highly possible that we see the neighborhoods, like the inner east side, the inner west side, those neighborhoods could potentially go through 1 or 2 cycles before downtown finishes the back end of this down cycle. Because we have all this new Class A office and housing and all this stuff that was built. We have 50+% of vacancy in downtown Portland. Well, everyone's moving out. When people move back in, it's upward mobility into the best office space. So you fill up the A, then you fill up the B, and then, well, what's left with C? Those buildings are no longer worth anything. Like, there's multiple buildings downtown, big, huge buildings for $1 million. And just did a $2 million renovation. Buildings asking $1 million. They can't get anyone to buy it because it's C class. No one knows what ultimately it will be.
Those are for sale right now.
You haven't told Trevor about
Can we
those.
buy those?
Yeah.
Sure, dude.
What are you going to do with it?
Yeah.
I don't know.
Yeah. So
No tenants for it.
Fill
right.
it.
And so you just in this period of time where it's going to be zombie land in some buildings while this cycle works out, so you know what to do with the worst product.
And that's not just Portland.
No,
I think
it's-
all downtowns across America are struggling with this right now.
Yeah.
I think
correct.
Portland is just like the epitaph of it.
Yeah, they're sort of the step, what do you call them, redheaded stepchild or whatever. Like they've been sort of bastardized, and I think a lot of that is media driven. So when
Exactly.
we went through the original Trump presidency, we had just riots and protests and all broken windows and burning down buildings and all the other stuff. And I think that a lot of that got national media attention, and it really just gave Portland a black eye that's going to take quite a while to heal. I believe it's healing.
Even though we didn't have that same breakout the second time.
Second time around, we didn't have it.
Yeah.
But I believe Portland's coming back, and I can see it from a management standpoint is, we've been in Portland now for over a year. And in the beginning, we had a lot of vacancy there. And maybe that's just because SMI is awesome and we were able to advertise it better and get the units filled up.
Wait, do you know marketing?
Well, but I will say this is it's all what we do. Our systems are in place for every market that we're in. And the hardest market that I'm in from Vancouver to Roseburg is Salem. Portland, I would have told you a year ago it was Portland. Portland is, to me right now, it's making a comeback. Like you can feel it. There's more activity. There's more application. Our rents are.
This is the suburbs or downtown though.
This is all over. I mean, we don't
Outside
manage. We
of
don't manage a
downtown.
lot of
Yeah.
downtown Portland.
Yeah.
Like we're not infill
Yeah.
management, but
Yeah.
we're managing sky rises and stuff like that. So this is garden low rise, which is typically going to be a little bit outside of the core. But yeah, all over up north is, I think it's going really well. All the markets that we're in, I would say Salem is still our toughest market.
What do you think that is the cause of that?
Being overbuilt.
Yeah.
Yeah.
Just overbuilt for 2 years.
Yeah,
or so.
Salem, a few years ago, everybody decided Salem was like a hot market, and they wanted to come here, and they wanted to build here and buy here, and we had national syndicators coming in wanting to buy, and it's like, where'd these guys come from? And we just got some attention that we didn't have, and I think a lot of it was because there was so much attention on Portland, and it was like, well, now what's around Portland? Because everybody can see that as people like Mike's talking about, the exodus begins, and then everybody goes, well, where's everyone going to go? And when you look at a map, it isn't hard to figure out that Salem's going to be one of the places people from Portland go to. And so a lot of, Troutdale, Gresham, Beaverton, there are a lot of markets really benefited from this urban doom loop or this black eye that Portland got, because people they left, but they didn't go far.
Right.
They just went 20 minutes away or an hour away or something like that. So we invest a lot in the North Coast. Seaside Astoria, I think, was a big benefactor of not only the black eye, but also because people are just like, oh, I can work remote. I can be in the office 2 days a week, whatever. It's an hour away. I can live in Portland, or I can live in Astoria and I can work in Portland. And so markets, we started to study those markets that were within striking distance to where it's like, it's not a 20-minute commute, but it's within an hour or an hour and a half away, to where if I only had to go to the office once a week or twice a week, I could go live where I actually want to live and then zip in and go do my office day when I need to do it.
Yeah, when I have to go to Portland twice a week, not that bad. 4 or 5, that kind of sucks.
But you live in Salem.
Yeah, it's in a 45-minute commute, right? It's just
Yeah.
But it's like I don't mind having that distance if it's twice a week.
I'm in Portland all the time. I hang out there all the time. And honestly, if just driving around Portland, I would say over the last year or so, it's better than it was. It's still not perfect, and no downtown really is. But I used to always think of Seattle as kind of Portland-esque, but it was more organized and clean. And I went to Seattle a couple of months ago, and I was like, holy crap, what happened here? Like, it is, in my opinion, way worse than Portland is.
But it's still way better than it was.
But it's not getting the media attention that Portland got.
Well, because Seattle, the freaking housing market's like booming again.
Oh, they're killing it.
It's stupid.
I don't understand.
One of our brokers is selling apartments up there. They're like on the low end, $350,000 to $400,000 a door for the same kind of product.
So that's the conversation of your incomes are not moving out, right? Their incomes are staying in the city.
So the place looks uglier, but the income stayed. They were able to keep the economics.
Yes.
Like downtown Seattle looks ugly, or like the out? Because I've driven like around Seattle, and there were some parts where I was like pretty rattled by how gross it was. But I don't know what
pockets.
downtown
I mean, right in the middle of downtown, I think is still okay. I didn't drive every street, but
Sure.
There were just it was shocking to me in certain areas where I went with how many vacant buildings I saw, how much graffiti there was, how many homeless camps and things like that. It felt like Portland 5 years ago.
Yeah. I think the important takeaway, and you even said it, is Salem's overbuilt. Another way to say that is that's where Salem is in the cycle. And the takeaway is economics are trends over a long period of times, and they create cycles. And trying to say this is what existed the past 3 years, to extrapolate that over a longer period of time is not the way to predict the future.
I was when you guys were interviewing Gary Coe, and he was talking about how he's not buying right now because of interest rates, but he uses super low debt. I was shocked to hear that, because like right now the price per unit you can get for rent versus price per door is, I feel like, at a really good point on a lot of these properties.
Yeah, we're at a bottom. It's a good time to buy. The basis is low.
Yeah, so why would a guy like that not be?
Well, part of what he was saying too is that he just wasn't that liquid right now.
Okay.
He said he's building up cash.
Yeah. I think he wants to be buying, but
to his point, he also said that he has free and clear real estate. And so I think this goes into Paul, where they're a different generation. So they look at it differently. Whereas you look at it like, yeah, interest rates are up, so prices are discounted, so I can get the same ratio, or I can get an equation that that works right now, but it's stressed. That'll change for the better. Whereas they're not looking at it in that way.
Well, and the other thing Gary was talking about was he isn't just saving up his pennies to go use a down payment. He's a trader. He wants to go buy 100-unit buildings, so he sells one project or two to go into this. And his point is, well, if he sold this project or that one, he has 3% debt, and he's got to go into 6.5% debt, and the math doesn't work.
And he needs someone to provide him a price to liquidate enough equity to make sense to transfer that equity.
Yeah, you'd have to be making enough of a spread, and it's not like our cap rates went up 3 points. They went up 1, and so the math just doesn't really, from a leverage standpoint, doesn't work until those loans have burned off.
Right.
And now you're like, well, now my loan is coming due anyway. I'm going to have to go into new debt. Now he has a different calculation in his brain, because it's like, well, I'm going to take 6% debt on anything I buy. I might as well go buy another building.
Yeah. So in Oregon right now, people always talk about the 1% rule, and you see properties actually renting for that. Is that, when's the last time you saw
Well,
that?
what's funny is 1% is just a gross rent multiplier, and so it's not taking into account that our expenses have gone up 35% over the last 2 years.
So it doesn't matter.
So that calculation is it's great on the back of a napkin, but you've got to dig deeper, because every project.
But the ratio is getting better, because it used to not be possible. And so you're looking at like, wow, the 50% rule, or whatever these stupid rules that people create without looking at an analysis.
Yeah.
So if you go from, well, you can only get the 50% to now you can get 1, well, that takes care of the increase of expenses. So we're getting better ratios. There's no doubt about you're getting better price per unit cost in line with price per rent cost.
If you were just paying cash for properties, you'd be making a better return today than you made a few years ago.
Correct, because cap rates are higher.
Yep.
We just don't have enough volume to show that.
Yeah, and you just don't have. And so when you're trying to play the leverage game and you're out borrowing money, it just screws up all of our calculations. I mean, if you have to buy, you go buy. But if you're sitting on 3% debt, like we own buildings where we have really low debt, and we're not thinking about selling them because it's like, well, we'll wait. I mean, there's no reason to. If you're going to rip something, just go raise the money or go find another way to buy it. Don't sacrifice that beautiful loan that you have on one of your
It really
buildings.
is interesting to see. I'd say like those people in the $5 to $20 million net worth world who are anti-markets now and more private equity, private investment, real estate. Like if you look at allocation for net worth individuals, people don't. The stock market is more like that lower millionaire level than the higher millionaire level.
Really? So you think people in the 20 million north are not in the market?
As much. They're need to
trying
go
to
to other places to get better returns.
And where are they going for it?
Inflation adjusted returns, higher risk, private equity, real estate. Yeah.
Interesting. So yeah, I mean, to your point, I don't know, was this episode or last one you were talking about how a big portion of our market is just driven by 401k money. People just mindlessly pumping money through their employer who matches, does whatever. It's run by an administrator, and now that money flows into these funds that are sort of moving the market. A big portion of the market is just a lot of money slushing around with people not paying attention to where their money is slushing around.
Yeah, and so it's cash, it's 401ks, it's future money. You can equate that to debt. Like, okay, so they're just pumping cash into this tide. Well, it's no different than pumping debt into a different industry's tide. So if you want to make projections on what the S&P is going to be, if it's based on people auto withdrawing deposits into their 401ks, well, then how do you deleverage that tide? Baby boomers retiring and pulling out of the 401ks, right? So you need to think of, well, what deleverages that? So if you're thinking on 30, 40, 50 year timelines of your net worth, and you're like, well, baby boomers are about to retire, people are stressed, they may not be maxing out their 401ks, well, then you're assuming that tide's lowering, which means the returns in the markets are going to be less. And if inflation hasn't changed, your inflation adjusted return is off whack. So we have to find a different allocation to improve that ratio.
Why can you think of people buying stocks as debt?
I'm just thinking from a tide standpoint, right? So think of it as cycles. This is not debt, it's income, but it's just money being pumped into this vehicle, right? So I'm relaying it to debt because we understand how debt works. You're just pumping more and more and more and more. Well, at some point, if you pump too much, you got to deleverage it. So this is different because if you pump too much, you don't have to deleverage it. But based on 401ks, there is a deleveraging event, which is people withdrawing more than people are pumping in.
Yeah, it's not a popular investment vehicle anymore. It's not something everybody. I mean, I don't know. Maybe that's wrong, but the current generation to me feels like they've been told the 401k ain't going to do it for them.
No, I think the people my age and younger don't trust the government to keep it around as much either. The benefits of it are going to be less and less and less, in my opinion.
Yeah, everybody's talking about real estate, crypto, other ways to make it. They're not thinking in terms of the same old adage of buy a house, pay it off, 401k, get the best job you can.
We have a really good 401k program. I don't participate in it. Just doesn't.
Why would you?
It doesn't. Yeah, it doesn't meet my goals.
So some fund manager can make a bunch of money on your money.
Exactly. Makes no sense to me.
Not to me either.
Yeah.
I don't. But I don't invest in the stock market at all. I don't buy bonds or stocks or crypto. So maybe that's dumb, but I don't understand it. So I do real estate.
Well, you can get a better return.
I mean, the spreadsheet looks better.
Yeah.
It seems to be. You don't have to overthink it.
No.
But it takes effort.
Well, yeah, it's because you work in it.
Yeah.
If you wanted real estate to be totally
if I was
passive,
doing something completely different and I was trying to park my money somewhere, I don't know. I would probably just go hire a money manager and take some of my earnings and let him go invest it. Which I might still do just for fun, just to see what happens. I have a feeling I won't be very happy with it.
I don't think so either. Yeah.
But people with a lot of money do that. They hire these guys and they go out and they're supposed to make them returns. They manage their money for them.
Yeah, I don't think they're hiring the same person that most people listening and who we would hire.
Oh, yeah?
Are hiring. Yeah.
Oh, you think we'd hire somebody better?
No, I'm saying I think the guys that have like $100 million to invest do. Yes.
They hire somebody?
Yeah, they have better opportunities for people to like.
the
best money manager,
family offices.
Best money manager in the world isn't going to take $100K, right? Like, will you please manage my $100,000? No, I cost $100,000 a year.
Yeah, I have a hard time wrapping my head around why anybody with $100 million would hire somebody else to manage their money. Like I want to hire the guy who has $100 million to manage my money.
Yeah,
it's just leverage.
I agree.
Leverage.
I'm saying from the perspective of like a business owner, like a maybe a Gary Coe's an example, even though he decided that he loved real estate, and so now he just manages his
So
own
you're
money
making
in
a
that
lot of
way.
money doing something,
But yeah,
and somebody needs to make that money grow.
Yeah, it's just
so
not
you
your
hire the
thing.
smartest person you can to go out and invest it in things.
Yeah,
Okay. I would just grow my business.
I agree.
Or
Yeah,
buy-
never mind.
or buy
Don't
buildings.
put any money with a
Jesse
money
Wynn.
manager. I take back what I said. Stupid.
I don't know. I'm genuinely curious about how people trust other people to manage their money.
Well, I think there's a very, very short list of people who have proven that they can continually get good returns on money. Like if Renaissance Technologies would let me put my money with them, I would put all my money with them.
Hey, 27% of stock advisors beat the S&P 500.
That's such a stupid stat. I'm talking about the short list who have actually beat the market every year for the last 20 years. And it's like, okay, yeah, I trust Warren Buffett with my money. I do. Yeah.
Yeah, there's somebody you could trust.
Yeah.
Okay, so doom loop. Let's go back. Do we agree that Portland is potentially in a doom loop? Is that what's
I
happening?
think downtown's
it's
an
not?
extended cycle, which can look and feel like a doom loop. Absolutely. But
So-
Portland in itself is not.
So to
in a
your
doom
point, if they are in a doom loop, they're just going to miss out on the next run up, the next cycle that happens, and they're going to.
just that core of asset. Yeah, but I don't think the city in general is in a doom loop. I think you look at, well, what are the silver linings? People still move here. It's not our people moving in is not the problem. That hasn't slowed down. It's people staying.
Mm-hmm.
So you recreate the environment so people want to stay. That is an easy fix. That doesn't take 10 years.
What's the fix?
The economic cycle downtown will take 10 years, but the livability cycle doesn't need to take that long.
Is the fix better politics, law and
Yeah.
order?
Mhm. Yeah,
like
all those things.
Like no more sanctuary
It's
city, no more.
recriminalizing hard drugs at the state level. It's criminalizing camping. It's creating a process to deliver the resources to the areas to clean up the city, like we've already seen in a lot of portions of downtown.
To clarify what a doom loop is too, the idea is that people move out and then there's less money in taxes and there's less
that's what they're hitting.
desire
Yeah,
to like fix the homelessness problem, and so
here's
then the homelessness
best
problem gets
example of
worse.
that. Yes.
And then since it gets worse, more people move out.
Yes.
And then since more people move out, there's less money,
And that's
which
the
means that it
billion-
gets worse and worse. And so like that's
the
that's
cycle.
the loop.
And when you have $1 billion of income leave, you have a large tax base leave, which makes a lot of sense. Here, but there's also another side of that equation. So like the middle housing code that we develop in. Okay, so in the past you build one single family home and you have a $12,000 property tax scenario there. Well, those properties are now bringing in $18,000 to $20,000 in property tax because they have more units rather than just that one house. And so you have a higher tax rate per actual individual property. So things will change and we'll create different policies to create different levels of income. And so it's just the loop is saying this is not going to change and there's no way to get out of it. And when you look at what Portland is, Columbia River, Mount Hood, Willamette River, Beach, Willamette Valley, Wine Valley, there's too many things in place to not change that cycle. It just takes the right steps over a period of time. It's a when, not if.
The other thing is, as this doom loop continues, if that's what it is, like you're talking about these towers that are selling for $1 million,
Not selling for $1 million.
listed for $1 million.
Yeah.
There will be more of that, and it will get to a place where it's a low enough basis where it will start to attract. Like I've had out of state investors who told me, no way, no how, our investors do not want to go to Portland. And then like 6 months ago, they're calling me, they're going like, but we can buy a deal in the Pearl that's 2 years old for less than what we're buying on Lancaster and Salem. So actually we were lying. We will go to Portland.
Exactly. It's just a cycle. And right now, especially in the pucker, it's exacerbated. So it'll change. It'll be, Gabe, did you see that occupancy rates are raising in downtown Portland?
Oh, I mean, they went from 9.5% vacant to like 5.5% vacant in Portland just in the last year. I mean, it corrected itself
in the residential world. Yeah,
yeah, fast. Really
yeah, and
fast.
outside of the winter, leasing was amazing. And then all of a sudden, the Super Bowl happened, and leasing stepped up again. It's crazy, the cyclicals that we've gone into. But you're going to have that in commercial as well, and it's going to be great, and it will come back.
It's going to be great.
Yeah. So the period now think of it this way. So look at what's the opportunity. So the opportunity is we're going to have a prolonged, while normal, the inner core, not the downtown of Portland, is just having its normal cycles. We have this long down economic cycle. You just get in front of that money. You can. Right now, there's no outside money that wants to come into Portland.
Yeah, it's a benefit to us.
Yeah, because you
Not
can
as much
place yourself in
competition.
front of it.
Yeah, there'll come a day where it's popular again, and we'll have to compete with the big dogs
I
coming
remember,
in from out of state.
Yeah, it was like 2016. I think we got our first piece of like actual legitimate. We're going to build some apartment buildings, land in escrow. It was so hard because money was already here. You're not in front of it, so you're competing with it. It's harder to compete with it, but if you get in front of it, you are it. So it's super exciting from that standpoint.
It's just hard to get banks and investors on board for, especially in smaller markets in Oregon and for downtown Portland. I mean, like what you were finding when you were going to try to buy that tower. It's like, okay, well, let's go raise,
family offices,
trying to
private equity,
trying to get a bank on board, trying to get investors on board. It's like you're looking at this going like, guys, we're ripping this for the cost of the dirt, and everybody else is like, yeah, but how are we going to fill it? How are we going to make money?
Pay twice as much on seller financing. Menashe, if you hear this,
another shout out. We got a buyer for your building, Menashe. All right, should we wrap this one up? Trevor gave a thumbs up a minute ago. He was pretty excited. I think he was done drinking his soapy water. Did you want to say anything? Are you feeling better?
We gotta end this podcast.
So number 100 on its way.
Oh, is this 99?
This is 99.
Oh, we're working up to 100.
What are we doing for 100?
I'll tell you what Trevor's not going to do is the night before we do number 100, he's not going to go party his ass off.
He really didn't party.
I just want to note Mike was with us too.
But look at Mike. He feels fine, and he's not drinking soapy water.
The 46-year-old guy.
Also, I don't know how I'm getting looped into this. I
You
feel
were just
great.
as bad as him.
No, I feel
All right,
great.
all right. We'll see you guys later.
Oh, we don't